Hello, everyone. Thank you for being here today. My name is Richa, and I'm here today with my colleagues Derek, Vishal, An, and Aman. We're here to present a refined marketing strategy for HubSpot so that we can continue on a path of growth and success. Here is what we're going to go over today: our problem statement, an overview of the situational analysis, review of our alternatives, and then we will finish with our recommendation and plan of action. Let's look at our problem statement. Currently, the HubSpot market strategy is undefined, which is resulting in customer development opportunities being wasted. We have two other points of focus that we want to address. One is determining which marketing strategy to best use, inbound versus outbound, as well as deciding the best pricing strategy for the business. And now I will hand it off to An to start us off with our situational analysis.
Thank you, Richard. Hubspot's customer service divided by two general type of customer, and each separate customer is distinct from the other. So the large client from HubSpot is based on small business owner customer, which is owner only. So we consider owner only is a limited decision making customer because they are easy to acquire and they make the decision on the HubSpot service is quickly. Um, they typically benefit the most from HubSpot because they don't have a marketing professional team. So they are looking for cost efficiency with a simple solution. However, they have the higher average churn rate because after they meet their client base, they will cancel the service. So the other type of customer service, the customer is a marketer Mary. So they are a marketing professional customer. So they are interested in analytical capacity of HubSpot. However, they are more expensive to acquire, and HubSpot consider them as a 10 decision-making customer because they have need more time to agree on HubSpot service. How? But one of the good sides of marketer Mary is they tend to be more stable compared to small business owner. And now let's look on the market share. So as you can see on the chart, so small and very small business are make up more than 70% of the market share. So while the remainder is large and medium business. So after 3-year release, HubSpot in 2008, we have like 1,000 customer. However, it's only accounted for like less than 1% of the total market share. So we feel confident that this percentage indicate HubSpot have huge room for growth. And now I would like to introduce you like about HubSpot competitor. So inbound marketing is made up from 3 segments: create traffic, analyze and qualify lead, and closing the sale. So when it's come to create traffic and analyze and qualify lead, so we have top 2 competitors that HubSpot is Maya, is Eloqua and Marketo. So Eloqua is the marketing cloud provided by Oracle, and Marketo is a marketing software originally founded at B2B marketing solution. So, however, those companies have higher costs compared to HubSpot, and they are more and they are difficult to use. And both of companies are focused on medium to large business. So in the closing the sales segment, Salesforce is the leader and they are known as the industry standard for managing and tracking sales. That's why HubSpot should not focus our resource on this segment. And now I would like to introduce Aman to continue on the situation analysis.
Awesome, thank you. And now I'm going to go through our pest product lifecycle, SWOT, and marketing mix analysis. For our political environmental climate, HubSpot is subject to a wide variety of U.S. and foreign government laws and regulations, such as the Children's Online Privacy Protection Act and the General Data Regulation Compliance Act. Political instability or disruptive political events in certain regions where we have customers could adversely affect their business through these political instability events and ultimately affect our profitability. For our economical environmental climate. When there's a recession, most companies significantly reduce their marketing budgets to save money. A recession would hurt our growth and profitability because we would have fewer paying customers every month. However, since we use a SaaS pricing strategy that allows our customers to pay monthly instead of one large sum, it works well during a recession. And for our social environmental climate, with most of the world having access to a mobile phone and the internet, consumers are constantly being bombarded with ads everywhere. As such, we're seeing consumer behavior towards ads change where people are beginning to dislike them or completely ignore them. And some companies have even started creating business models that help consumers hide these ads, such as ad blocker. And as more consumers filter out these ads, our products become increasingly more attractive, especially to our BTC customers that are trying to sell products directly to their consumers. And for our technological environment, we're all living in a fast-paced digital world where attention is currency. And with the rise of Web 2.0 technologies and social networking platforms, getting potential customers' attention is becoming increasingly difficult. Consumers are beginning to tune out their attention to traditional outbound marketing strategies and are focusing on what's important to them. And with companies looking for new methods to get their consumers' attention, it increases the chances for our inbound marketing tools to be utilized. Moving on to our the stage of our product lifecycle. Currently, we are in the growth stage. We have a strong financial foundation with 17 million raised. We have over 1,000 customers with 500 million page views served and still growing. And out of our 2.3 million potential market, we only have 0.04% of the market share, meaning there's still plenty of room to grow. And there's emerging technologies such as Web 2.0 that are growing exponentially. And our freeware products are garnering acclaim all around the world and driving buzz that is continuously bringing in more potential customers to our company. Starting with our internal strengths and weaknesses. Strengths, we have a strong financial foundation with 5 million raised from General Catalyst in 2007 and 12 million raised from Matrix Partners in 2008. Our low cost and user friendly product allowed anyone to build a thriving and build and manage a thriving inbound marketing program. And we have incredible support systems, customer support, and a dedicated team that is focused on assisting our customers even during off hours. Our inbound marketing combines marketing and sales, or smarketing, to eliminate the need for cold calling. And our lead generation with inbound marketing costs 5 to 7 times less than lead generated by outbound marketing. And our freeware products have generated a lot of positive press and online buzz surrounding our product. And our weaknesses, over 50% of our leads from customers are being ignored. Our inbound marketing requires a significant time investment for customers to see meaningful results, around 10 plus hours a week. And our owner ollies and marketing Marys speak different languages and have different needs, requiring development resources to be divided up to cater to both customer segments. The HubSpot team is restricted from outbound prospecting due to our cold calling is for losers marketing campaign, which makes reaching sales numbers more challenging because if someone from our HubSpot team were to cold call, it would hurt our brand. And lastly, for our weaknesses, our customer churn rates were showing that some customers were canceling within the first few months after obtaining the initial burst of value from our software. Moving on to our external opportunities and threats. For opportunities, inbound marketing is generating new business at a higher rate than outbound marketing. And we have a huge market potential of nearly 2.3 million small and medium businesses. Our HQ is located near MIT, Massachusetts, Cambridge, Massachusetts, a hotbed of activity for tech startups with young and passionate MIT graduates immersed in Web 2.0 culture. And we have a strong opportunity to dominate the lead generation and analysis or qualification stages of the customer funnel, just as Salesforce.com dominated the stage devoted to closing sales. For threats, most businesses, including our customers, wanted a mixture of inbound and outbound marketing. Since we only offer inbound marketing programs, we're limiting our growth by having customers use our competitors' outbound marketing programs. And as we heard from Anne previously, we have increasing competition from competitors offering similar integrated services such as Aloka and Marketo. A recession could significantly reduce our growth and profitability since most of our businesses come from owner ollies or small business owners who are most negatively impacted during a recession. And during a recession, small businesses tend to reduce their marketing budgets. And lastly, for our threats, changes in demand of our current customer segment would make it challenging to find new prospects and adapt to their needs. For our marketing mix, starting with our product, The HubSpot web-based software is a system of tools and training designed to help businesses attract prospects, qualify their potential, and convert them into customers through our inbound marketing strategies. The software includes templates to design content for websites, blogs, and social media, and tools to help customers optimize their exposure on the internet, tools to help customers select and engage the right customers, and tools to analyze their results. For our price, we use a software as a service pricing strategy that charges customers a small monthly fee between 250 and 500. Our low cost strategy is one of our competitive advantages. And our we have another strategy towards our owner ollies and marketing marries, where for our owner ollies it costs us about $1,000 to acquire, and we charge them 500 upfront and 250 a month after that. And we're profitable around 2 months after them paying for 2 months. And for marketing marries, the acquisition cost is about 5,000, and they pay us a upfront fee of 500, and then 500 monthly. And for that, we're profitable around 9 months. For promotion, we focus solely on inbound marketing tactics to drive prospects into the customer funnel. We have a robust website featuring white papers, webinars, podcasts, and a blog that provides information about Web 2.0 and inbound marketing strategies free online. And our most successful marketing tactic is our freeware, which are small software programs available for free and accessible on the internet that provide useful information to potential customers, such as our website, Twitter, and Facebook grader that measures the effectiveness of your content. And we've also created an 800-member LinkedIn group called Pro Marketers that is dedicated to marketing professionals who want to learn more about Web 2.0 and inbound marketing strategies. Lastly, for our place, since we're a web-based software, it allows us to reach customers on a global scale through our website. And our potential customers can find information about us through our social networks and our news outlets. Now I'm going to hand it off to Vishal to discuss the evaluation of our alternatives.
Thank you so much, Aman, for presenting situation analysis. Now let's evaluate 3 alternate plans that we can implement at this moment. First plan would be do nothing. So as illogical as it may sound, but it can be one of the best decisions that we can take at this moment. We can remain committed to inbound marketing as exclusive services and continue to cater to our diverse customer base. Why we can do that? Because we are already at 1,000 customer mark, and the growth has been amazing so far, and it is because of what we started with, and that was inbound marketing. So owner OLEs and marketer marries, they contribute 73% and 27% respectively of the business, and it's a good diversified risk balance. So the pros of going ahead with this plan would be, by doing so, we are preserving the company's image of an inbound marketing service provider. Just imagine if we start doing outbound marketing at this moment, because we were saying we were, opposing outbound marketing from day one. So it can harm the company's image to potential as well as the existing customers. Also, by doing this, we will continue to capture all the revenue streams like before. Together, there are about 2 million customers, and we have plenty of opportunity to scale up. The cons of this plan is we'll have more diverse customer base, which can frustrate our sales force and lead to management issues. Also, since we are ignoring almost 50% of the leads, we are not even looking at those leads, we'll be losing out on a substantial acquisition of the customers within our system only. So let's evaluate the second alternate plan. Psychological repositioning. In this plan, we can try to change the company's image of the product that we offer. We run a marketing campaign which says that we provide customer acquisition solutions instead of just saying that we are inbound marketing providers, and establish the fact that inbound is a crucial aspect of that process, but it's not the whole. So by doing so, we are ensuring to use outbound marketing techniques and other initiatives which were hampering the company's fast growth in the past. With this, we can also start cold calling on all the data collected through various channels and build a huge customer pipeline. Increasing prices for owner OLEs to maximize profits, as it's large potential market and the churn rate is also very high. The pros of implementing this plan would be, of course, it will lead to a faster growth, as we'll be doing two-dimensional marketing right now, inbound as well as outbound. Since outbound marketing takes the target market into consideration, so there will be much lesser complexity and increased quality volumes. The cons of doing this plan, of course, the company's image can take a huge hit. Since we started out with this inbound marketing and then we almost criticize outbound marketing methods, changing our goalpost at this moment can confuse our existing as well as potential customers. Also, if we increase the prices, we may see lesser conversion from lead generation to closing the sale. The big reason why our customers choose that product was because of the lower prices and flexibility. So if we increase the prices, they might be less interested in trying out a new expensive product. Also, our sales team will be much more stressful as we'll be increasing the diverse customer base by implementing this plan. The diverse customer base will have diverse requirements, which will be difficult to cater to at a single point. Now, let's evaluate the third alternative plan: define and focus. So, in this plan, what we are suggesting is that we define our segment, which can help HubSpot grow quicker with lesser burden on management, without hampering company's image and lowest acquisition cost as well. This may sound too good to be true, but let's see the plan. The segment is owner onlys. We see that more than 1 million customers are there in this segment, and we are still at 1,000. So there's a 1,000x opportunity to grow in this particular segment only. We'll ask our sales force to engage with all the leads in the system, but will not do outbound marketing, hence preserving the company's image. We'll also provide bundled value offering with a slight increase in price and longer contract terms. The pros of implementing this plan, of course, we can easily achieve the growth as we'll be focusing on a one particular type of customer base with huge potential market. We'll also see higher profits as product and management teams will be aligned towards this category only. Hence, there will be more streamlined and structured approach, which will reduce the cost and increase revenues. The longer term contract and the bundle services will ensure that high customer retention is there and customers are more satisfied with the product. A small con with this alternative would be we may see reduced conversion due to longer term contract because customers were because early owner customers, they expect flexibility. Also, we may lose 30 to 40% of the market because we are completely focusing on owner onlys instead of marketer marries. So now that we have analyzed three alternative plans and we have discussed their pros and cons, over to Derek for final recommendations and the plan of action.
Thanks, Vishal. After consideration of the situation analysis where HubSpot has identified an enormous market potential of over 2 million potential customers, when we consider the situation analysis that identified that 50% of our leads are being ignored, there is an enormous opportunity to capitalize on alternative number 3, and that is to focus on the business-to-business client segment, the owner ollies, as they've been termed in our company, and we have the capacity to actually make that a reality. We have a sales force that is currently underutilized. There is excess capacity for the sales force to absorb the leads that are being ignored, to engage in active marketing techniques that will enhance not only the inbound nature of the marketing that HubSpot provides, but also to utilize some of the more traditional techniques to really develop this plethora of leads that are available to HubSpot. And one of the items it really is going to see some synergy. The current HubSpot situation as it exists now, there really isn't a specific defined target customer, and that has created some paralysis in terms of developing a strategy that is uniform across the company. The focus on business to business and these owner ollies comprising the small business and very small business owner is going to allow for focused concentration by the sales team. So the sales team will need to be trained to focus on the needs of this particular market segment, and that will help maximize the conversion of these formerly wasted leads. Next slide, please. The other critical element that's really been identified in the situation analysis is that the package that HubSpot is currently provided, it is based on the idea that the business owners, these small business owners, are going to be actively involved in creating content, in managing their blogs, in managing the content on their websites. And one thing that the data has shown is that the small business owners that also purchase the website hosting services that HubSpot provides, that they have a very low churn rate. And that seems consistent with what we're seeing looking at the customer history to date, is that there is a certain portion of churn rate. There is a loss of stickiness for the customers because requiring these small businesses to actually invest their time in managing this type of marketing and promotional opportunity really is a missed opportunity by HubSpot. And there are opportunities to develop and create additional content. HubSpot can very quickly scale up to provide turnkey solutions so that these small businesses and very small businesses don't have to invest any of their time. They can focus on their businesses and what they're best at. And we have significant opportunities to cross-sell bundled services. There is a significant benefit to capturing the web hosting capabilities and the sales to these individual businesses, because we know when we are able to sell web hosting to these small business owners, they're more likely to stay with the company. So we have an incentive to cross-sell that product, and we can do so by reducing the pricing and selling or offering bundled services. We also need to enhance the type of content that HubSpot is providing, again, to make this a turnkey situation to really capture this market. These small businesses realize the biggest benefit of any customers that HubSpot has serviced in the past, and we can really enhance it and significantly increase the market penetration in this particular area. Next slide, please. One thing that is critical is strengthening the engagement, the terms of engagement with these customers. The one item that the data has shown is these small business owners are able to exit the contracts currently with HubSpot after they realize the initial bump an increase in their customer prospecting. We really need to address that by extending the contract duration. We want to make this a longer term commitment, not only to stabilize revenues, but we can really deliver enhanced good to these customers. We're going to navigate them through the initial bump. We're going to develop the content. And at that point, we're really going to know what's working for them. And learning feedback from the customers, we're going to be able to develop a very targeted and a very specific marketing campaign that's going to continue to drive business, to increase their customer prospects and their conversion over time. And this is a win-win for HubSpot and also for the customer. One area that certainly needs some attention as well when we talk about developing and encouraging long-term relationships, we want more than just the 3-year minimum contract duration. We want them to be with us for life. So at the time of renewal, and we need to manage this, and it can be done very easily, we need to offer to customers on renewals significant incentives and loyalty discounts to continue to keep them engaged. Our level of value delivery to them is going to be enhanced as time progresses, and the time that's devoted in managing the content in that particular client needs is actually going to be reduced, because we're going to know them very well. We're going to build up data and other information so that we're very nimbly able to address their needs. And finally, the data as shown in the situation analysis, the market is so large, and these small businesses have proven to be such easy sells. There's a low acquisition to acquire these customers. They realize a huge benefit. The demand is so overwhelming that HubSpot needs to increase its price to really meet that market demand. So there is an opportunity to radically grow from the 0.04% to a much larger market share. Next slide, please. And the best part about this type of strategy is HubSpot is in a very enviable position. We have significant resources. Our venture capital program has been very, very successful. We have significant reserves, and the type of target focused consumer plan that we have in place, we're able to scale to this very, very quickly. The technology is in place. We have the capability across the nation to do this. We have an engineering staff that is capable at addressing the needs of these small businesses and these very small businesses. There's no need to expand the expertise on the team. We do need to bring on board some content writers, but that is really an easy item to upscale. So we're able to make this type of transition to focus on these small business owners and the very small business owners, and pivot very, very quickly with minimal capital impact to the company. And the ultimate fallback situation, if for some reason the strategy does not materialize, we can very quickly return to what we have known the past 3 years with our company experience. We can continue to cast a wide net. We can start servicing whatever customers may find us through our inbound marketing efforts. So a very, very easy plan to implement with exponential upside potential. Thank you.